and CIBY, ITR1 or ITR2, which is the return for you. How will you find it out? ITR1, who are the eligible persons and who are not eligible, and ITR2, who are the eligible persons and who are not eligible. The instructions are published in the website. Let us go through the instructions and see whether you are eligible for ITR1 or ITR2. Before starting to the differences between these two returns, the thumb rule is ITR1 is the simplest form and ITR2 is the regular return form. So if you are eligible for ITR1, then you file ITR1, and if you are not eligible for ITR1, then only you have to go to ITR2. It is not the other way. And if you have income from business or profession, you are not eligible to file ITR1 and ITR2. So the condition is that the income should not be from income from business or profession. Now let us start with ITR1. This return form is used by an individual who is a resident other than not ordinarily resident. So that's the starting point of the eligibility criteria. So ITR1 is applicable only for individuals. It is applicable for individuals who are resident Indians. So if you are a non-resident or not ordinarily resident, then you are not eligible for ITR1. Now, the second point, whose total income does not exceed rupees 50 lakhs. So, if your total income is above 50 lakhs, that is 51 lakhs say, then you cannot file ITR1. You have to file ITR2. Now the income, the nature of income, which are the heads we can use in ITR1? We know that there are 5 heads of income. For ITR1, we can use income from salary or pension, income from one house property, interest income and or family pension taxable under other sources. So if you are a salaried person or a pensioner, then you can use this ITR1. You are eligible. If you have income from house property, then also you are eligible. But there is a condition. There should be only one house property. So if you have 2 house properties, go for ITR2. Now, the third income is income from other sources. Here is also a condition: interest income and or family pension. So income from other sources, if your income from other sources is only savings bank interest or FD interest, then you can use ITR1. But if the income is from family pension, what will you do? Then also it is acceptable. But if it is any other income, then ITR1 is not applicable. You have to go to ITR2. Now there is a note given. Suppose your income includes the income of the spouse or minor child, that is clubbing of income. Then can you file ITR1? Yes. There's a condition. if the income being clubbed falls in the above income categories. That means if your minor child's income is also income from one house property or interest income or family pension income, then you can club it in under include it in ITR1. But if the minor child has capital gains or some other business income, then ITR1 is not applicable. So this is the eligibility, and who is not eligible, that is also given. This is divided into A, B, C. Let us go one by one. The first A is about status, certain persons who cannot use this form. B, whose income during the previous year belongs to certain income. So then he cannot use it. C, so he has loss, deductions, relief, tax credit, then he cannot use it. So one more point is there. If you are a firm or company or trust, then you cannot use this form because it is only for individuals. Now let us start with the A part. An individual who is a director in a company. Suppose you are the director of a private limited company, not a public limited, but a private limited company, a small private limited company, and you are one of the directors of the company. Then you cannot use ITR1. You have to use only ITR2. So even though your income is below 50 lakhs, and you have only income from salary or you have only one house property, then also you cannot use this ITR1 because you are a director. Has held any unlisted equity shares at any time during the previous year. It is not at the end of the year. The previous year is 2021. At any time during the previous year, suppose August 20 till August 25, 5 days, you have some shares of an unlisted equity shares, that is unlisted company. You have such shares only for 5 days. Then also you cannot use this ITR1. You have to use ITR2. As any asset including financial interest in any entity located outside India. So this return is only for resident Indians. You are a resident, but you have asset outside India. You have asset in Bangladesh or China or America. Then you cannot use this form ITR1. You are not a non-resident, you are a resident, still you cannot use ITR1. Suppose you have financial interest in an entity, you don't have any assets, but you have financial interest in any entity outside India, then also you cannot use this form. You are not eligible to use ITR1. That means you have to use ITR2. A signing authority in any account located outside India. So you don't have that non-residential status or not ordinary resident. You are a resident Indian, but still there's a problem. If you have a foreign account, foreign bank account, and you have the signing authority in that account, then ITR1 you are not eligible. Use ITR2. Has income from any source outside India. So you are getting income from outside India, from any source. So then ITR2 is to be used. As deferred tax on ESOP received from employer being an eligible startup. Go for ITR2. Has withdrawn cash and TDS has been deducted under section 194N on such withdrawal. So even in that such a case, you have to use ITR2, not ITR1. That is, bank has deducted TDS under section 194N. It is TDS under section 194N, not the your TDS in from savings bank account interest or FD account interest. It is TDS under section 194N, cash withdrawal, on cash withdrawal. You are not eligible if the TDS is related to section under section 194N. Now the B category comes. The income is from profits and gains from business or profession. If your income is from profits and gains from business or profession, then you cannot file ITR2 also. ITR2 conditions, you can go to the instructions, you can see that this return form is to be used by an individual or Hindu undivided family who is not eligible to file ITR1 and who is not having any income under the head profits or gains of business or profession. So you are not eligible to use ITR2 if your income is from profits or gains of business or profession. Capital gains. So if you have capital gains, go for ITR2. ITR1 is not, cannot be used. It can be short-term capital gain, long-term capital gain, both cases. Income from more than one house property. So if you have only one house property, then you can use ITR1. But if you have income from more than one house property, two house properties or three house properties, then ITR1 cannot be used. Income under the head other sources, which is of the following nature: winnings from lottery, activity of owning and maintaining race horses, then income taxable under special rights, income to be apportioned in accordance with the provisions of section 5A, agricultural income exceeding rupees 5,000. So in all these cases, you are eligible to file ITR2 and you are not eligible to file ITR1. The C category is if you have certain claims of loss or deductions or relief or tax credit, then you cannot use this form. The number one is any brought forward loss or loss to be carried forward under the head income from house property. So if you have a loss in the previous year and you brought forward that loss, then you cannot use ITR1. Suppose you have loss in the current year under the head income from house property and you want to carry forward that loss to the future year, then you cannot use ITR1, you go and take ITR2. Loss under the head income from other sources. So if you have loss under the head income from other sources, then use ITR2, not ITR1. Any claim of relief under section 90 or 91. So if you have any double taxation relief or such reliefs you claim, then you cannot use ITR1, use ITR2. Any claim of deduction under section 57 other than deduction under a clause relating to family pension. So family pension, then you can use ITR1, but if you want some other deduction under section 57 under the head income from other sources, then you cannot use ITR1. Any claim of credit of tax deducted at source in the hands of any other person. So in such situation also, you cannot use ITR1. So go through the instructions. The instructions are published in the website. Instructions to ITR1 and ITR2. You go and analyze this ITR1 and ITR2 and find out which is the return suitable to you. One important point, if you use the wrong ITR, then it is considered as the return is not filed. That is, the penalties for not filing the return will come to you in future. So select the right ITR, ITR1 or ITR2.